Good evening, students. Welcome back to the session on audit. So in the last two sessions, we have been discussing about the tax audit, and we still have some more part around the tax audit. I would say some clauses are still pending which need to be discussed. And after this, we plan to start with GST audit. Okay, yeah. So let us do a quick recap of whatever we have discussed in terms of tax audit broadly. So tax audit is something which is required as per the Income Tax Act, and this is required in addition to any other audit which will be performed in respect of that entity. But there are certain thresholds, so it's not something which is mandatory to each and every entity. Only those entities which cross a certain thresholds in respect of turnover and some other criteria that we discussed, then the tax audit becomes applicable. And under tax audit reports are prescribed in the given formats, and the form is also prescribed, which is required to be filled in by the management and which is then certified by the auditor. Certification means the attestation by the auditor, which is called as audit report on the top of form number 3CD. And this form 3CD is a big document which you must have observed through the discussions that we have had, and a lot of procedures are required to be performed by the auditor in respect of each and every clause. Yeah, so some of the important clauses that we have discussed were about statutory compliances in relation to reporting of the deductions like PF, ESI, etc. Then a very big disclosure in terms of the quantum which is required to be reported, that was about the information related to the fixed assets. Then another very important disclosure with which the entities generally remain concerned, and that was about disclosure around section number 43B, through which allowances and disallowances of certain expenses are sort of approved or finalized. So that's why, as we discussed, it keeps changing till the time tax audit is closed, or this form number 3CD keeps changing, it keeps getting updated, because the management want to update this information as and when there is any payment made by them up to the date of filing of return. The next clause, which is also bulky in terms of the reporting requirements, was about disclosures related to loans advances. Loans advances given, loans advances taken, the repayments, etc., which we discussed in relation to section 269SS, 269T, because again, for the entities which have been taking any of these loans, deposits, repaying them, giving them, it can be a bulky information, and all of those informations are required to be furnished, which is not only limited to the closing balances, which also captures the transactions occurred during the year, and which also captures the transactions which would have been squared off, okay, wherein the balances are also not outstanding. So that's why it becomes a very bulky document. So I would say most of the clauses we have covered. Now we are towards the end of this form number 3CD, and we were discussing certain clauses around this details of brought forward loss or depreciation, which was required to be reported under this clause number 32. Now moving on to this part C, D and E as to what do they require. Whether the assessee has incurred any speculation loss as referred to in this section number 73. If yes, furnish the details of the same. Whether the assessee has incurred any loss as referred to in section 73A in respect of any specified business, furnish the details of the same. In case of a company, so that means this is only about a company, state whether the company is deemed to be carrying on speculation business as referred to in section number 73. If yes, furnish the details of speculation loss, if any, incurred during the previous year. Okay. Now, how will the auditor audit all of these details? One thing is about the understanding of the business, because that is how auditor will be able to start as around the information or the particulars which would have been furnished by the management or which may not have been furnished by the management, whether those are complete or not. So this is something which the auditor can do on the basis of discussions with the management, inquiries with the management personnel. He can also go through the minutes of the board meetings, etc., wherein some of the business decisions are discussed. Then he can also go through the books of accounts, because it's all about the operations of the entity, the business of the entity. So in case there are operations, businesses, then all of those transactions would have been recorded in the books of accounts of the company. At least in the financial statements, the disclosure around the accounting policies would have specified all of these transactions. Yeah, wherein we are believing that all the accounting policies would have been appropriately disclosed by the management. So that can also be one of the way to capture all of these information. And of course, with all of these stuff which will be available to the auditor, by going through all of these documents or the information, he can also go down to the account ledgers or the account codes, wherein he can get down to the details of all of these information which would have been furnished by the management. And as we have been discussing that at every point of time under Form 3CD, the challenging part is not about verification of the information. The challenging part is generally about the completeness of the information. Okay, so let's suppose if there is any number which is reported by the management, auditor can easily verify that, because he'll know the number, he'll also know what are the supporting documents around it through which he can verify that. But the challenge becomes bigger in case the number is reported as nil, wherein the auditor may have to capture that information. Yeah, so that is one area which will have to be taken care of by the auditor. Moving on to the next clause, clause number 33. In this case, section-wise details of deductions, if any, admissible under Chapter 6A or Chapter 3E, that means the deductions around Section 10A, 10AA, all of these are required to be reported. Now, in the given case, this is nil, but for the assessees who will have all of these types of deductions, all of them will be required to be reported over here. And in case those are reported and those are covering various sections, herein again, the management may put one appendix or an attachment or an annexure. Now, how will this information be audited by the auditor? This information can be audited by the auditor by looking at the supporting documents, on the basis of which deduction would have been claimed by the company. For example, if we look at the deductions around ATC, etc., those deductions would have been claimed by making certain investments. So the auditor can go through those investment documents, means the original documents, to ensure that yes, these deductions have been made. As regards Section 10A, 10AA, there are certain conditions which are required to be fulfilled. There are certain criteria which are required to be fulfilled, for which a very detailed documentation, a robust documentation mechanism needs to be put up. Otherwise, an entity may not be able to claim all of these deductions. So all of those documentation is required to be verified by the auditor to ensure that the particulars which have been furnished over here are correct or not. Because on the basis of these particulars, the information will flow to the income tax return. And on the basis of that information in the income tax return, the tax liability is required to be computed. Okay, yeah. Next clause, clause number 34, A, B, C. Whether the assessee is required to deduct or collect tax as per the provisions of Chapter 17B or 17BB, whether the assessee is required to furnish the statement of tax deducted or tax collected. If yes, furnish the details. Whether the assessee is liable to pay interest. If yes, please furnish the details. So we can get on to this annexure first of all. So this is annexure number 13. Let's see what all information are required to be captured over here. This clause captures the information in relation to the TDS which would have been deducted by the assessee. So it's not the TDS which would have been deducted by some other party, for the assessee? No. So we are talking about TDS, which would have been deducted by the assessee in respect of various other parties. For example, if the assessee is paying rent, on rent, assessee would have deducted TDS. If the assessee has got some contractors, for those contractors, TDS would have been deducted. On salaries of the employees, assessee would have deducted TDS. Yeah, so there are so many TDS provisions. All of them are required to be captured over here. Let's see what are the details which are furnished. Tax deduction and collection account number, TAN number of the entity for which TDS is deducted, section reference, and the nature of payment, means under which head that TDS will go, whether it will be salary, interest, commission, rent, or whatever be the case. Total amount of payment or receipt of the nature. Total amount on which tax was required to be deducted or collected. Total amount on which tax was required to be deducted or collected out of clause number 4. Out of clause number 4. Total amount on which tax was deducted or collected at specified rate. Then comes amount of tax deducted or collected. Then comes total amount on which tax was deducted or collected at less than the specified rate. Amount of tax deducted or collected. Amount of tax deducted or collected not deposited to the credit of the government. So let's understand the requirements which are required to be captured over here. As you can just see the details which are furnished over here, auditor is first of all required to check all the payments, all the expenses, or we can say all the accruals and the payments on which TDS should have been deducted. Means if there was payment to a contractor or if there were expenses for the contractors, assessee should have deducted TDS at the specified rate. Specified means something which is coming from Income Tax Act. Okay. In case these amounts have been deducted, the TDS has been deducted at the correct rate and on the full amount, then those details are also required to be furnished. Let's suppose if the total amount was 6 crore, total amount of expense was 6 crore, on which TDS should have been deducted at 2%. Then the auditor will furnish the details whether the TDS has actually been deducted on 6 crore or 5 crore or 4 crore or say 6.5 crore. And whether this TDS has been deducted at 2%, 3%, 1.5%, so whether it is actually the specified rate or not. Okay. Now this exercise is considered to be the most important exercise. Plus, this requires significant effort of the audit team because the quantum in respect of almost all the organizations, in respect of checking of this clause or in respect of checking of this information is generally huge, or we can say in comparison to all other information which is verified in form number 3CD, this particular information stands out. And we can easily say that audit of this clause out of audit of entire form 3CD would easily take at least 30 to 40% of the time of the auditor, generally, because this information is huge. So let's try to understand why we are considering this to be involving significant efforts. See, the first issue is about ensuring completeness. Now, ensuring completeness in respect of this type of information is very, very difficult. And this wherein the management may not have a mechanism to capture all of these details directly from their accounting systems or directly from their reporting systems. For example, let's suppose auditor will ask the management for the total accruals made to various contractors during the year. And some of these contractors may be subject to deduction of TDS at 1%, some of them at 2%, and some of them may not be covered in terms of deduction of TDS because of certain thresholds. Now, capturing all of these data from the system on which this checking can be performed by the management first of all is difficult. Now the management may say that each and every transaction which they have been executing during the year, they have been checking it, and only after checking by them, all of these information is sitting in the accounting system or whatever information system which they will have. But if that is required to be pulled out from the system in one go, or maybe pulled out at a single place in the form of a report with various categories of rates, various heads under which the TDS should have been deducted, or in certain cases wherein the TDS should have been deducted, means the segregation of that information into these categories is not possible at times, is not available with the management at times. And if that is not available, then whatever information management will provide, auditor will only be able to test check whether the rates were getting deducted at the appropriate rate or not. But whether entire population has been covered on which the TDS should have been deducted, auditor will not be able to capture that. Auditor will not be able to capture that. It will be difficult for him to capture that information. And that's why auditor will also require to spend significant time on this area. He will have to get down to the systems of the management. He will have to understand as to what is the basis, maybe within the systems of the organization, which are on IT platform, for example, companies on SAP or Excel, etc., as to the mechanism which they have been following, through which they are ensuring that each and every transaction will pass through this deduction of TDS wherever it is applicable. And if they don't do this, then it becomes difficult to track this. Yeah, clear on this? Clear on this part? Then comes another requirement within this clause which says amount of tax deducted or collected, not deposited. Means TDS has been collected, TDS has been deducted, collected in case of TCS and deducted in case of TDS. So the assessee has deducted. So let's suppose assessee deducted 51 lakh of TDS. Now this should get deposited to the credit of the government by 7th of the following month. By 7th day of the following month. So that's the due date for deposit of TDS. But let's suppose if that has not been deposited. So where do we report this? Under this clause, under this column. And how will the auditor check this? How will the auditor check this? For checking this, the auditor will again need to verify the bank statements. The auditor will need to verify the challans, deposit challans, on the basis of which he will get to know whether the management has deducted this or not, and whether the management has deposited this or not, and if the deposit has been made, whether that deposit was done in a timely manner or not. Okay, yeah. Now another challenge which we can discuss around this clause could be in relation to salaries. Now some of the data which we have been discussing, say in relation to interest, professional services, contractor, some of these data may still be pulled out of the report. Say for example, there is a report which is pulled out. So let's understand the challenges around it, as to what are the challenges which the auditors generally face and which the management generally faces. Say TDS has various categories, one which is related to contractor, rent, third is salaries. So let's suppose entity has got only 3 types of transactions on which TDS is required to be deducted. And let's suppose entity has been able to pull out the reports, means provide the information of all the contractual expenses. So let's suppose amount on which TDS should have been deducted, means the gross amount. Say for contractors it is 1 crore. Say for contractor it is 1 crore. Okay. Say for rent it is 1 lakh. And let's suppose salaries are 10 crore. Salaries are 10 crore. Okay. Now in this case, the first step will be to understand what are the rates at which TDS is required to be deducted at. Let's suppose a couple of rates are there. 1%, 2% and nil. So we can say 0%. And we are saying this to be 0% because there are certain thresholds. If the payment to a contractor, or let's suppose any party, crosses that threshold, only then the TDS is required to be deducted. So in this 1 crore, there could be payments or expenses related to those parties also. So this would mean that the management will have to segregate this total population of the contractors into these 3 categories. Yeah. Only then it would have applied percentage of the TDS and would have ensured that the total TDS which they deducted is matching with what it should have been done or not. Yeah. So I'm saying, let's suppose then this information management has been able to provide to the auditor, on the basis of which auditor will verify whether the TDS deducted is correct or not, and also complete. Let's suppose on rent it is 10%, and which is easy. So for rent, generally you will not see that to be a challenge, because rental payments in any case will be not so significant. Third comes the challenge around salaries. Now on salaries, do we have any specified rates? No, we don't have the specified rates, because deduction of TDS on salary will vary from one employee to another, depending on their salaries, depending on their salary structure. And this may also vary month on month. And this may also have some excess deductions. This may also have some lower deductions. At times, excess TDS may have been deducted, and which has also been deposited. Now comes the challenge around the data related to this. Okay, now let's see what could be the challenges. First of all, auditor will not know. So let's suppose auditor will verify whether TDS on this entire amount has been deducted accurately or not. So by taking this total population of salary, will the auditor be able to apply any percentage? So can the auditor say, I will apply 10% on this, 20% on this, 30% on this? No, he cannot say that. And even all of these percentages may vary depending on that. In certain cases, surcharge is required to be added. In certain cases, it is not required to be added. And so there are a lot of combinations which will come in, and there are a lot of bucketing of this total population which will be required to be done. There can be many employees for whom no TDS should be deducted. Why? Because of their slab. Yes or no? Because of their slab. So that's why for salaries, to check whether the TDS is deducted at the correct rate or not is simple, is easy, like we can see for any other case. So out of this total population, auditor can pick out, let's suppose 20 samples, and check that whether TDS was deducted at the accurate rate, at the correct rate in respect of each and every sample or not. So that can be done. Okay. But if the auditor is required to verify whether the management has deducted TDS on the total amount on which TDS should have been deducted or not, do you think just by looking at this population it can be done? No, it's not possible. For this, auditor will have to either pull out all of these reports, or split this report, or segregate this report into various buckets which are possible, and then check that calculation, which you will not get to see in almost every organization. No organization will be able to produce this information. That's why in such a case, what is it that the auditor can do? Auditor can get into the systems of the organization. Auditor will have to understand the processes of the organization. So if this TDS deduction happens to be automated, so in case of certain organizations wherein this data is huge, therein the configurations are made in the information systems or in the ERP packages or in the accounting systems, so that each and every such transaction, whenever it is executed or whenever it is recorded, will also capture the applicable TDS rate on a monthly basis, and which is also then verified maybe by a separate person on a monthly basis to ensure whether these deductions are happening at the correct rate or not. Okay, because if that process or that system is not understood by the auditor, then around the completeness, he will not be able to obtain the comfort. The completeness testing or this checking of completeness will always remain a big trouble for the auditor. Yeah. And this is also one of the reasons why management representation in respect of this entire clause, means which captures this audit, which captures the audit of this particular clause, is also considered to be important. Because management representation is also accepted by the auditor while performing his calculation to a certain extent, and that extent is comparatively more in respect of this clause as compared to any other clauses wherein we might have seen the direct computations are available and the challenges involved are not so high. Okay, yeah, clear on this? Moving further on to another clause, details of statement of TDS deducted or TDS collected in terms of the returns. So the returns are also required to be are also required to be filed by the assessee on a quarterly basis, which will again be getting due as per the specified due dates. So the auditor will be required to verify. How will be able to verify? He can just get onto the portals. He can look at the returns as to their submission dates, because all of these information are available online, and the assessee will also have the records of the deposits of these returns, and whether the statement of tax deducted or collected contains information about all details or transactions which are required to be reported. That means whether all the information which was required to be captured has been appropriately captured in these returns or not. Yeah. Okay, all of you clear on this? Yeah. Next clause. Now this next clause captures the information related to quantitative details of the inventory. And this is also required specifically for trading or the manufacturing concerns. So let's see what's the disclosure or what are the particulars. In case of a trading concern, give quantitative details of principal items of goods traded, opening stock, purchases during the year, sales during the year, closing stock, or shortage or excess if any. So this is one. In case of manufacturing concern, give quantitative details of the principal items of raw material, finished products, and the byproducts. For raw material, information will start from opening stock, then purchases, then consumption, then sales, then the closing stock, yield of finished products, percentage of yield, shortage excess if any, and for the finished products, information will contain the details will contain information about opening stock, additions, then consumptions, and the closing stock if there are any shortages. Now comes the part of the auditor to audit these details. So what will be the basis to audit all of these details? Because this information relates to the inventory, so that's why the first step which the auditor can perform is to check the inventory details. Now in this case, the inventory details are only required to be produced in quantitative form. Yeah, the amount is not required to be mentioned over here. We can get to the annexure also, 15 number, as to how this is presented. Yes. So if you can look at the information, it captures the details of raw material as well as finished goods. So it starts with the opening stock, purchases, consumption, and the closing stock for raw material as well as finished goods. Now, as you can see that the information is only limited to the quantity. Information doesn't capture the amount. Okay. Now, first way to verify this information will be to obtain the inventory valuation details. The entity would have valued inventory in its financial statements. And when the inventory would have been valued, the information would have captured, or the inventory valuation would have definitely captured quantity as well as amount. So first of all, the total quantity which should be appearing in that inventory valuation corresponding to the amount of the inventory valuation which has also been reported in the financial statements will get tallied. Okay, so the auditor will get the first comfort that the quantity which has been shown in this clause is in relation to the value of inventory which is appearing in the financial statements. So at least one-way match is performed. Second thing, auditor can also look at the production records, inventory records in relation to these items, wherein he can look at the opening stock, closing stock, purchases during the year, consumption during the year. All of these details are maintained by the entity. There are separate records of inventory which every organization would maintain. And from those details, all of these information can be easily verified. Then the auditor can also test check some of these items into the records of the entity. And from the records of the entity, which would have also flown to the inventory valuation sheets, to check whether the classification is appropriate or not. Say for example, if you look at the screen right now, total opening stock was 63 lakhs 78,000. That's the total opening stock. Now this contains 4 items: fungicide, herbicide, insecticide and others. Now whether this quantity of fungicide is correct or not is also required to be checked, because if the auditor will compare the total quantity and ensure that the total quantity reported over here is correct, but there could be discrepancies, let's suppose in the quantity for fungicide or the herbicide, therein again a problem may exist. Yeah, because whatever has been reported in clause under Form 3CD has to be appropriately verified by the auditor. So that's why auditor will not only look at the totals, he will also look at each and every each and every classification in terms of the details which would have been furnished in form number 3CD. Okay, yeah. And same is the case for the details of finished goods, which will be something in relation to manufacturing entity or the entity which is into manufacturing of goods and not limited to the trading of goods. Okay, yeah. And the third item is all about the traded goods, which are purely into trading. So first is the raw material, second is about the finished goods, and third is about the details of only traded goods. And the same basis is required to be captured in relation to verification of these quantities. Okay. Another way to cross verify all of these details could be by checking whether the sales details match with the sales records or not. And for the sales records, entity can also do some sort of reconciliation with the numbers reported with statutory authorities, for which quantitative details would have been maintained by the entity, because the valuation of the sales would have included the so all of those onto these quantitative details, and to ensure whether these quantitative details are correct or not. Okay, yeah. All of you clear on this? Okay, so now I can look at some of your queries. Ambika is asking, sir, can the TDS amount accuracy be checked on a sample basis? Yes. In fact, for the accuracy, you will do the sample testing only. Then Ambika has a query. She's saying, so does the materiality level, do we need to set that materiality level for selecting sample? The materiality level, I would say, generally is not considered as the criteria in case of tax audit. That doesn't mean that tax audit will require each and every information to be captured, and definitely some basis for sample selection is also required to be set in case of tax audit, wherein certain thresholds can be set. Thresholds like maybe all the items above 50,000 are selected. Maybe all the high value items have been selected. Then certain low value items are also selected. Okay, so that can become the basis for the auditor to do the sample selection. But as far as this materiality is concerned, I'm not sure as to how this will really fit in for the sample selection. This may not really help us the same way it was helping us in case of statutory audit. But it doesn't mean that even the very, very small amounts will be required to be checked. So we are not looking at 100% checking. We are definitely required to do sample testing for tax audit also. Sumit has a query. Sumit is saying, during the audit, management does not provide any details regarding investment for the purpose of calculating TDS on salary. He's saying management is not providing any details regarding investment. So why do you need information regarding investments for calculating TDS on salary? Oh, I think you are looking at the, you are talking about the investments on the basis of which employees would have claimed deductions, something like investments considered under 80C, etc. Yeah, okay. So you're saying management does not provide those details on the basis of which TDS on salary would have been computed. How an auditor would deal in this scenario? Because duty of the auditor is restricted to the extent. See, as regards the information which will be required by the auditor, management will have to provide. And if the auditor will need some information, some data to perform his audit procedure, management cannot deny that. So same is the case for tax audit, what we have also seen for statutory audit. And in case the management will not provide this, then what will the auditor do? Auditor will evaluate impact of this matter. Auditor will be understanding the limitation, and on the basis of limitation as to what could he what is it that he could not check, and the same thing will then be required to be reported by the auditor in his report. Okay, yeah. Then I think Supriya has suggested certain ways for sample selection, and that is about stratification, of course. Yeah. So all of those bases will continue to be used in case of tax audit or in any other audit also. Yeah. In case of a domestic company, details of tax on distributed profits. Now these details are required to be furnished. Total amount of distributed profits, amounts of reduction as referred to in 115.0, total tax paid thereon, dates of payments with amounts. So how will the auditor track this? By looking at the minutes. In the minutes, auditor will be able to capture this information. And then the auditor will also be looking at the details which would have been provided by the management to the auditor in respect of reporting under this clause. And auditor will be verifying all of these details with those supporting documents. Whether the assessee has received any amount in the nature of dividend as referred to in clause 22 of section 2. If yes, please furnish the details, amount received and date of receipt. If the assessee would have received any such amount which is considered as such under this particular section, that again would have gone to the financial statements, books of accounts of the company, and in certain cases would have been recorded as the income of the company. So that can be one of the bases through which auditor can verify it, whether it's been flowing over there or not. Another thing is to check by looking at the bank statement. So that will also become the basis to verify whether this has been actually received or not, and particularly in terms of this date of receipt which the management would have captured. As regards the amount, auditor will have to again look at the documents, because whenever any such payment would have been received, so some acknowledgement, some documentation around that receipt would also have been received by the assessee. Okay, yeah. Then I have this query from Supriya. She is asking, so please give example of some documents filed with various authorities to verify sales. So very simple and a very popular document, or we can say a particular which we can look at for sales, could be about filings with the GST authorities. That is about GST returns, which are required to be filed on a monthly basis, quarterly basis, paid on a monthly basis. So one can easily go to the GST portal and verify whether all of the details of sales have been captured over there or not. In case all the details are not captured, as to what are the differences and why those differences have been arising. So that is all about understanding the reconciliations which the management would have done in any case. So even if there are differences for which reconciliations would be there, so auditor will be able to understand as regards the completeness of all of those details. So this will help in one way to the auditor to ensure the completeness of the information which would flow in this form 3CD. Okay. In next clause, you can just read, just give me 1 minute. So clause number 37, just give me 1 minute. Okay, so now moving on to this clause number 37. It says whether any cost audit was carried out. If yes, give details. If any, of disqualification or disagreement on any matter, item, value, quantity as may be reported, identified by the cost auditor. Yeah. So this is in relation to the cost audit. Now in this case, first of all, auditor would need to check whether the cost audit is applicable on the assessee or not. In case this has been reported as none. In case this has been reported as none by the assessee. Because if the assessee would have reported something over here, then cost audit would have been applicable to the assessee. That is one. So other than checking about the applicability or all of these things, the next step will be to check whether there was any report which has been received from the cost auditor or not, whether that contains any sort of qualifications, etc. or not. And all of those particulars are required to be furnished over here. And how can the auditor check that? Auditor is not required to get into that cost audit. Auditor is not required to bring in his expert for this cost audit. He will have to just go through the requirements of that cost audit. He will have to just go through that cost audit report, have discussions with the management around that report in case there are any qualifications, observations, and ensure that all of those particulars have been reported over here. Now in this case, generally there's a challenge in terms of the report of the cost audit. Let's understand what's the challenge. For cost audit, there is a timeline. Let's suppose for 1920 tax audit is going on. And let's suppose management plans to get this tax audit completed by 30th June 2020. Now, for this financial year, means the previous year 1920, management is required to comment on the cost audit. Whether the cost audit for this particular previous year is completed or not, or was carried out or not. Now, in this case, it will be no, because it may have happened that the due date of cost audit is later than the date by which tax audit would also get completed and reported by the tax auditor. Yes or no? And that's why there may not be any observations which may be required to be given over here. And this is something which will continue year on year. This is something which will continue year on year. Now, in that situation, what will the auditor do? Does it mean that the management will not be required to report anything every year under this clause, saying that this was not carried out, this was not carried out, this was not carried out? Because by the time it is carried out, tax audit gets completed. The answer will be no. Management would be required to say that it's carried out, because again for this cost audit there is a delay. Yeah, and some of the observations of the last cost audit report would also be relevant for the current year. So these are some of the perspectives which the auditor will have to take care in respect of these type of audits. Now, same is the case of clause number 38 and 39. It says whether any audit was conducted under Central Excise Act. If yes, give the details of any disqualification, disagreement. 39. Whether any audit was conducted under section 72A in relation to valuation of taxation services. If yes, give the details. If any, of disqualification or disagreement on any matter. So for all of these things, the audit procedure will remain same. The audit procedure will be in line with whatever we have discussed. So it's just that there are 3 audits which are discussed over here, and for which the procedures which the management would be considering will be in line with whatever we have discussed. Fine. And now we are coming towards the end of this form number 3CD. Then it says details regarding turnover, gross profit, etc. for the previous year and the preceding previous year. So let's see how will this information be furnished. So there's a note over here. It says details are required to be furnished for principal items of goods traded or manufactured or services rendered. Let's see what is the information which has been reported over here. So first is about the information regarding the total turnover for the current year and the preceding year. So current year is previous year in this case. Then the gross profit has been reported. Gross profit and the turnover, because gross profit turnover ratio or gross profit ratio is required to be computed over here. Then the net profit ratio is required to be computed. Then the stock in trade ratio is required to be reported over here. In case there are any material consumption as a proportion of finished goods produced, that is also required to be reported over here. Okay, yeah. And how will this information help? If the department, means the income tax department, will require any sort of assessment, so they can do this. If they will require any sort of assessment, so they can do this by looking at these ratios. there's a ratio analysis which will be available to them. So for example, if you can see on the screen, gross profit ratio for the previous year is 16%, but in the last year it was 22%. So it has gone down significantly. So this may lead to some queries. Okay, somebody may have a question around it as to why this has gone down so significantly. As around the net profit ratio, there's a change, but it's not so significant. But again, on the stock in trade ratio, based on the turnover, we can see there's a big change. It has increased significantly as compared to the preceding year. Yeah. So again, just by looking at the ratios, nobody can make any analysis or the conclusions. He will have to get down into the details of all of these informations. But yes, the first analysis, the first assessment will start with these type of ratios in certain cases by any sort of reviewer who will be looking at all of these information. All right. Now moving further, please furnish the details. Now 41, please furnish the details of demand raised, refund issued during the previous year under any tax laws other than Income Tax Act, Wealth Tax Act, along with details of relevant proceedings. And we can also look at the other clauses, whether the assessee is required to furnish statement in form number 61 or form number 61A or 61B. If yes, please furnish. Income tax department reporting entity, type of form, due date of furnishing, date of furnishing if furnished, whether the form contains information about all of these details or not. Similarly, the information whether the assessee or its parent entity, all the alternate reporting entity is liable to furnish the report as referred to in section 286 of the Income Tax Act. If yes, please furnish the following details, which is about whether the report has been furnished, whether the report has been furnished by the assessee or its parent entity or an alternate reporting entity, name of the parent entity, name of the alternate reporting entity, date of furnishing of report. If not due, please enter expected date of furnishing the report. Now around all of these clauses, I'll not again get into too much details because we have all understood all the procedures around it. See, all of these clauses capture the information which would have been received by the which would have been received by the management. But in respect of these type of clauses, there are generally certain departments which the organizations would have in terms of the large or the medium sized organizations, or maybe a dedicated team or dedicated personnel would be looking at all of these areas. So that's why it will be very, very important for the auditor to have discussions with those personnel to capture all of these data, to ensure that all of these information or all of these clauses are applicable, or to understand whether these are applicable on the entity or not. For example, if you look at this this clause around 43, yeah, this is all about this. Yes, so this is 43. So this is all about the CBCR reporting. Yeah. Now again, whether the management has evaluated this or not. So at times it has also been observed that until unless this information is not furnished, so this clause is now not so new, but when this came up, so many of the entities did not know whether this will become applicable to them or not. So if they would have not been knowing about the applicability of this, then whether they will be able to furnish all of these details? No. So that's why in that cases the compliance problem was also there. But now as this has been settled, so it doesn't exist, but still it will be important procedure on the part of the auditor to first of all have discussions and inquiries around these clauses, and only then he will get into the further details around checking all of the supporting documents around all of these clauses. Okay, yeah. And after auditing of this data, auditor will then go on to his audit report, wherein he will evaluate all of the observations which he would have had in respect of various clauses, and accordingly he will decide whether he would want to give the report as clean or bring in some qualifications in his report, for which there is again a separate section wherein he can just put down all of his points, all of his observations. And as I told you, all of these reportings are now done in the form of a utility which is online. So that's why at times auditor may require to find some place, and at times he may require to put down some of the information in the form of certain attachments, which is also acceptable. Okay, yeah. With this, we come to an end to our discussion on tax audit. So this has been, I think, a big session or a very stretched session in respect of discussion on a particular topic, but I'm sure you must have understood that there are so many practical aspects around this form 3CD which are importantly required to be considered. And please also remember that throughout our discussion we have not got into too much details around the taxation, so one will also have to understand all of those provisions. So that's why whenever you will study this, whenever you will revise this, it will be very, very important for you to first of all make sure that all of these income tax provisions you would have revised. Otherwise, you will not be able to think through the procedures which may be relevant to that particular clause. Okay, yeah. So now we can move on to the next topic, that is about GST audit. Okay, so now moving on to the next topic about GST audit. It is again a specialized type of audit, and this is again something which is coming in addition to all other audits which may be applicable to an entity. And please remember that this audit may also become applicable to an entity to which tax audit is applicable. So you may be thinking, sir, how many audits an entity will become subject to? There is no limit, and for which there is a criteria. So again, this will go on the basis of criteria. So it's not that each and every entity will become subject to all of these types of audit. There are thresholds, and the thresholds have been set in a way that certain organizations which are considered to be of a significant size by the relevant authorities get picked up for audit, or which are required to get their audits done. Okay, yeah. Now GST, we all know GST is something which started in 2017-18, and that was the first year of GST audit, and I'm sure that many of you would be knowing about it, and that is all done. Yeah, so now 2017-18 is done, it's closed, and its GST audit is also closed in terms of the due dates, because all of these due dates, they have stretched quite a lot. Okay, they kept on extending in terms of the due dates. So if you really ask me about the due dates of the GST audit, so we may not have a capping the way those have been extended. So let us get on to the basics about the GST audit as to what all things are required to be understood over here. So like any other audit, GST audit will also require same set of procedures to be performed by the auditor, like examination of records, returns, documents, verification of the turnover, or various particulars which will be required to be furnished. So I think we can now get down to those particulars which are required to be furnished. Okay, now GST audit can be of various types, which we'll talk about. But I'm talking about one of the audits which is required under the GST laws to be conducted by the assessee or by the entity on its own. Means it will get it done by the person or by the CA or maybe a chartered accountant who can do that GST audit. So we are talking about GST audit in the context of that entity which is required to get that audit done himself. So let's say there's an entity which is required to get the GST audit done and this GST audit is required to be done on an annual basis. Means every year GST audit will be required to be done, provided entity is falling into that criteria, applicability. So I'll come to that criteria slightly later. Now, what is it that the entity will require to do? And let's try to compare this with statutory audit as well as tax audit. So in case of statutory audit, entity would have prepared the financial statements. In case of tax audit, entity would have prepared or filled Form 3CD. We are talking about the management responsibilities, correct? Now, similarly, in case of GST audit, entity would be required to prepare annual return, a document called as annual return of GST. So you remember we discussed that every month certain returns are required to be filed with the GST authorities. In addition to that, one return is required to be filed on an annual basis with the GST authorities. Yeah. Along with this return, or you can say another document which will be required to be considered under the GST audit to be prepared by the management is reconciliation of this GST record with books. This is another thing which will be required to be prepared by the management. And on this, if you look at statutory audit, audit report is issued. Okay, and there is no term specified to the audit report. We just simply call it as audit report. Under Form 3CD, we call the report by a name called as 3CA or 3CB. 3CA or 3CB. Yeah. Under GST audit, this piece of annual return is called as GSTR 9. This piece of return is called as GSTR 9, on which auditor will provide his audit report. Which auditor? GST auditor. He is not the tax auditor. He is not the stat auditor. No, we are talking about GST auditor. And that report will be called as GSTR 9C. This report will be called as GSTR 9C, on which a lot of activities are going on, because currently lot of GST audits have been going, because currently the due date for the GST audit of financial year 18-19 is extended up to 31st of October. That means 31st of October of this year. So that's not the due date which we need to consider. I'm just telling you that currently you'll see a lot of messages or a lot of information around it in case you have also been engaged in any of these audits. Yeah. So this is about our requirement now, for which audit will be performed and audit report will be issued. Now, for the purposes of audit, what is going to be the relevant thing? The relevant thing is about audit of this information. Why? Because this information will be prepared by the management. So this is not the duty of the auditor to prepare this information. Duty of the auditor is only to audit this information, similar to what we have seen in case of stat and tax audit. Clear to all of you? Clear to all of you as to what is required to be done? Because we will focus our discussion more on these areas. Okay. Now, in the context of this, we can get onto the slide once again and understand some of these points which are given at the end. So it says audit means verification of correctness of turnover declared. And where will this turnover come? In the reconciliation as well as in the annual return. Why will it come? Because in the monthly filing, sales details would have been furnished and the GST liability would have been furnished. So all of those information will be compiled in the form of annual information and which will be called as annual return. So that's why turnover or the sales will be required to be verified. The taxes paid against the liabilities will be required to be verified. If any of the refunds were claimed in respect of the input credit, the GST input credit, that would also be required to be verified. And the input credit which would have been availed for paying these GST liabilities will also be required to be verified. So can you now understand as to why some of these items have been specifically captured within the meaning of audit? Yeah, because all of these data will comprise of these information. So that's why in this case, auditor is not required to just check every clause or just check all of the information which is appearing, say, in Form 3CD or the financial statements. No, he is looking at these information. So any information or any data around these clauses or relevant to these clauses will be audited by the GST auditor. Okay. Shubham seems to have just joined. So Shubham, we are discussing GST audit. Now moving on to the types of audit. As we have discussed, there are three types of audits. Audit of accounts, which are prescribed under a specific section of the GST laws. Number one, audit by tax authorities. Which audit is this? Wherein the commissioner or any officer authorized by the commissioner can undertake audit of any registered person for such period, at such frequency, in such manner as may be prescribed. So this audit is something which will be prescribed by the commissioner. We are not saying that this is something which will be regularly required to be done for one type of entity or for one entity. No, this is something which will arise only when it is prescribed by the commissioner. Yeah. Third, special audit, wherein the registered person, now in case of GST, entity, okay, the term entity which we have been using, which we were using for assessee under tax audit, will now be also called as a registered person. Registered person means the person who is registered under GST laws. Means the person who is registered under GST laws and who will be subject to this GST audit. Okay, or maybe any other GST audit which we have been discussing. So second is again a specified one, not covering each and every registered person or the entity. Third is again a specialized audit wherein the registered person can be directed to get his records, including the books of accounts, examined and audited by a chartered accountant or a cost accountant during any stage of scrutiny, inquiry, investigation or any other proceedings, depending upon the complexity of the case, on order of assistant commissioner or above, with prior approval of the commissioner. So this is again a special type of audit. So this is again not an audit which will apply to each and every entity. This is again not an audit which will apply to an entity every year. So which is the audit which will apply to an entity on an annual basis? What we discussed on the board was first one. First one we discussed. Okay, second and third one are specialized. Special one, which will be required only when the department will direct to get those audit done. And in respect of those audits, again, department will give the directions, department will require it, but the way those audits will be conducted, whether we are talking about first, second or third, the approach will be same. The auditor will be verifying all of the information in relation to the GST and in relation to the records of the company through which GST liabilities, GST input credits would have been captured or would have been computed. So all of these computations, all of kickings, all of these checkings by the auditor under all of these three will generally be aligned. But it's just that the first one is a regular activity for which the entity will be required to appoint a GST auditor and get that done within the due dates which are prescribed. So if you can see, the first one is this: to file returns, audited accounts and the reconciliation statements, for which GST audit will be done by chartered accountant or a cost accountant. So that's the requirement for audit of GST. So that's the requirement for GST audit. Now, as around the GST for 1718, the applicability of an entity to get covered under GST audit was having a turnover of 2 crore during the financial year. So that means if in the financial year 1718 the turnover exceeded 2 crores, GST audit became applicable to them. Okay, yeah. So now what we can do is we can just move on to the procedures related to GST audit. And similar to what we have done in case of tax audit, I'll just take you through all of these utilities, now all of these documents. And similar to the tax audit, all of these documents under GST audit are also required to be filled online. Even the audit report under GST audit goes online. So you don't see any hard copies at all in case of GST audit. So this annual return is all online. Reconciliation is also online. This report, GST and 9 sign, this is also online. And these are all called as utilities. Technically, they are termed as utilities. So you can just quickly see on the screen various returns which may be relevant. So for us, I would say the most relevant happens to be the GST 9, which is a return on an annual basis to be filed. And GST 9C is the one which is required in relation to the audit. Okay. So all of these particulars I'm not reading from here. We can just quickly look at this flowchart and then we'll get on to those utilities. And we'll also understand as to what all audit procedures are required to be covered, because so far we have not discussed any of the audit procedures. So form number GSTR 9C, that means GST audit, can be broken into two parts. One is to get onto the reconciliation statement, and second is certification. Certification again is what? To sign it and to give the opinion. Opinion in the form of saying whether the particulars which are furnished in all of these returns or this reconciliation are true and correct or not, for which various parts or various clauses or various informations are available, which will contain basic details about the entity. Then it will contain details about the turnover, and then those turnover are required to be reconciled. Means what was the turnover which was appearing in the books of accounts and what was the turnover which was appearing in the GST records. And if there are any differences between these two, what are the reasons for differences? Reconciling items. If there is any reconciliation which is required for tax paid, so what is the tax liability as per books and what is the tax liability as per GST records? If there is any reconciliation, that is required to be reported. Reconciliation of input tax credit. So if the input tax credit was availed, what is the amount in the books and what is the amount as per the GST records? And if there are any differences, the reconciliations, those are required to be reported. And of course, at the last, auditor's recommendation on additional liability wherever he believes, wherever she believes that the management has not computed the correct liability of GST. So that will be a kind of qualification wherein the auditor would not agree with the GST liability computed by the management, and that's why he would say that as per him, the GST liability should be say X minus 1 or X plus 1 in case the X is the amount which is reported by the management in this return. And he will also disclose the reasons around it. That is again a kind of reconciliation that you get to see. Now I think we can go to that GST utility straight away to understand all of these details in a better manner. Okay, so this is how this utility will start, or you can say this is how these returns and reconciliation statements will start, on which a GST audit is required to be performed. First part will start with certain basic information about the entity. GSTIN means the GST number. Financial year, which financial year is 17, 18, 18, 19 or whatever be the financial year. Legal name of the entity, trade name of the entity if they have any trade name with which they are operating, name of the act if they are liable to audit under any act, so that will be Companies Act in case it's a company. Okay, then is the person making reconciliation statement is the same person who had conducted the audit of mentioned GSTIN, which is not possible. So it will be no. Now the GST auditor will be required to audit this information. And how will he audit this information? He can look at the financial statements of the company. He can look at the PAN number of the company. He can just verify the GST registration certificate of the entity. From that, all of these details can be made available to him, through which he can verify. In fact, if you remember, all of these details we verified in case of tax audit also, and therein also all the documents will be same. So same is the case over here also, but in this case it will be very, very important on the part of the auditor, very, very important on the part of the auditor to check all of these particulars in the GST registration certificate. Because if the particulars in the GST registration certificate will not match with the particulars which are furnished in this form, then the discrepancies have been reported in a way. Because GST department will only understand or will only accept the details or the records which are appearing in the GST registration certificate. If those are not aligned, then those will be considered to be discrepancies. Ambika has a query. Ambika is asking, sir, is this GSTR 9C required to be filled by the management similar to form number 3CD? No. As I told you, you need to break it into two parts. One is GSTR 9 and second is GSTR 9C. GSTR 9 is required to be filled in by the management. That's the annual return. GSTR 9C is the one which is going in from the auditor. So that is something which will be reported by the auditor. Currently, the way this utility appears to you, you are getting an understanding as if all of this data is appearing in this GSTR 9C only, and that's why it's something which has been picked up by the auditor. Now, the way the utilities really work is that all of the information which will be uploaded by the management in GSTR 9 will be automatically, will be auto retrieved or auto populated into any of the particulars of GSTR 9C wherever required. So that's why they work on an automated system. Yeah. Now point 2, it's about the reconciliation of turnover declared in audited financial statements with turnover declared in annual return. What is annual return? GSTR 9. So at the first place, turnover as per audited financial statements has been given. So it's 6.76 crores. And then it appears they have some reconciling item on the basis of which annual turnover which has gone to the GST records or GSTR 9 is 5.26 crore. So can you see there's a difference? Yes. Can we say it's a problem? No. Because it may happen that the way accounting is done and the way revenue is recognized using the accounting standards is not the way which GST department will accept. They may require certain adjustments. They may have a different methodology to consider to compute some of these amounts which may not align with the way they have been computed as per the books of accounts. For which it's very, very important that the management puts all of those items under the reconciliations, and which is required to be verified by the auditor. Auditor needs to ensure that yes, it's not a discrepancy, it is actually a reconciling item. And reconciling item as per the requirements of the law, means as per the accounts, numbers were okay, as per the GST numbers were okay, and that's why the reconciling items are also correct. And you can see some of the items which have been reported as reconciling item. Now in this case, on the next tab, we can see reason for unreconciled difference is required to be given. So in case there is any unreconciled difference, the reason will be required to be given. Then comes the next part, which will talk about reconciliation of turnover declared in audited financial statements with turnover declared in annual return after making the adjustments. Now turnover which was declared in the annual return was 5.26 crore, but it may happen that out of 5.26 crore, on some amount GST is not required to be paid, or GST is required to be paid at nil rate. Means out of 5.26 crore which has been given in GSTR 9, say 4 lakh is subject to GST at 0 rate. The tax will be computed on what? 5.22 crore. But for GST, it's very important to understand that what's the total amount. It's 5.26 crore. So this amount is now required to be reconciled and reported over here. Then in case any unreconciling difference arises, that is required to be reported in terms of the reasons. Then a split is required to be given. Split in terms of the various rates which would have been considered for GST, and the split in terms of the taxable value into various tax amounts. Now GST will be of 3 types in terms of the liability. What are those liabilities? Central, CGST, state, SGST, integrated, IGST. So all of those breakups are now required to be given over here. Yeah. And Please understand that all of these information in this utility will be auto-populated with whatever management would have reported in their various records. And in case there are any differences, those are required to be captured over here. Then comes the reconciliation of tax paid. Now, what is this reconciliation of tax paid? Now, all of these tax amounts which would have been considered by the management, if there is any tax which has not been paid, that will be captured over here. Then comes the reconciliation of net input tax credit. Net input tax credit which would have been reported in the, or which would have been appearing in the financial statements or the books of accounts vis-a-vis annual return. So now you can see input tax credit, liability, turnover, all of these, what are we doing? We are comparing that with the books of accounts. Yeah, we are comparing that with the books of accounts, comparing the annual return with the books of accounts in terms of these components, because these are the components which will flow into GST, on the basis of which GST liability would have been computed. Now, similarly, this detail will be required to be furnished, which captures the reconciliation of ITC declared in GSTR 9 with ITC availed on expenses as per audited financial statements. So now there's a split which is available in terms of various components on which ITC would have been claimed. What is ITC? Input tax credit. So now a split has been given, that what was the amount of input tax credit on purchases, what was the amount of input tax credit on freight, what was the amount of input tax credit on imported goods, so that each and every component is available and total of these components will match with the total input tax credit, whether that is going into the GST records or into the books of accounts, and that reconciliation is also provided over here. And then again, if there's a difference, that will have to be reported. Now in this case, you can see one difference has been reported. What does it say? Invoice booked twice in accounts and input is also taken twice. So this is a problem. So this will be reported. Either the management would rectify this or this would be reported. So the tax payable on the unreconciled difference will have to be computed. And then comes the next part around auditor's recommendation on the unreconciled differences, wherein auditor will compute the tax liability as per his assessment. Okay. And then comes this part related to certification, which you can read, and which is the final document, which is the sign off by the GST auditor. So let's read this. We report that the audit of books of accounts and the financial statements. We report that the audit of books of accounts and the financial statements of XYZ Private Limited having this address. Okay, so all of these address details are appearing, was conducted by Messrs. This Messrs means the name of the GST auditor and the address of the GST auditor, being membership number in pursuance of the provisions of the Chartered Accountants Act, and we annex here to a copy of audit report dated. So the date of audit report will come along with a copy of balance sheet, P&L. So first of all, it's about the financial statements. Can you see this? So first of all, the auditor is saying that the audit of financial statements is completed, for which audit report is completed. Sorry, in this case, the name of the auditor was that of the statutory auditor. So the audit report is attached and the audited financial statements are also attached. Something similar to what was done in case of tax audit. Then auditor will say, we report that the said registered person means the entity has maintained books of accounts, records and other documents as required by the GST laws, regulations, rules, etc. The documents required to be furnished under the GST laws and the reconciliation required to be furnished under the GST laws is annexed herewith. So they are saying now along with this, annual return has been furnished and the reconciliation statement has been furnished. Now comes the most important part. In our opinion and to the best of our information and the explanations given to us and the particulars, the said particulars in the form number GSTR 9C are true and correct, and if there are any qualifications, those will be reported below. So they are saying subject to observations or qualifications, if any, which are given below. So in this case, let's suppose there was one qualification, so it will come. In case there is no qualification, it will be nil. And then the auditor's sign off will come. Auditor's details will come. Place, name of signatory means the signing partner, membership number, date, address of the firm or the address of the proprietor or whoever is signing this, then address and all of these details will come. So this is how the sign off will be completed. Now in this case, again, if you will see the format of the audit report, it's exactly in line with what we saw in case of form number 3CA or form number 3CB, isn't it? Yeah. And the way the opinion has been given is also in line with what we saw in case of form number 3CA or form number 3CB. Correct? And the reason for this is that both these audits will require books of accounts to start with. Because without the books of accounts, all of these particulars which will be furnished will not be of any use. There has to be a basis, and the basis has to be audited. Shubham, I think, has been doing GST audit, so that's why he's able to appreciate some of these points, because he will be knowing about all of the requirements of this utility, etc., which is good, and I'm sure many of you would be doing this. Yeah. So this was all about GST audit. Now in this context, some of the points that we need to understand, because we have just run through all of these requirements, but some of the audit procedures we have not discussed. So let's understand the audit procedures. See, in relation to the turnover, in relation to the input tax credit, and in relation to the tax liability, first of all, the first important procedure for the GST auditor will be to trace the balances, trace the amounts to the audited financial statements when they are reported under annual return. Then he will also check what are the amounts which the entity would have reported in the monthly or the quarterly GST returns, because all of those amounts should be added and then the amount of annual return should have been computed, correct? So these two will form the basis, and then will come the reconciliation. Now this reconciliation will be prepared by the management, but the auditor needs to audit that. Auditor needs to audit that with the supporting documents, because if there is any reconciling item, so auditor needs to understand that transaction first of all, and then he needs to verify the documents to check whether the explanation which the auditor has received is really in terms of that transaction or it is something else, and whether that is legally acceptable. So when I say legally acceptable, so is it really in line with what the books of accounts would have done and what the GST law would have required? If that is the case, it's fine. Similarly, in respect of the input tax credit, it can be a big challenge, because all of these liabilities are important to be captured, but at the same time, if any wrong input has been claimed, that can lead to a liability which will be raised again by the GST department with interest or penalty. So that's why verification of GST input credit on various components is required to be carefully done, wherein auditor needs to check whether the input tax credit on certain items is available or not. even though it's been charged by other parties. So there are certain items on which input tax credit cannot be availed, considering the requirements of law. So that is first. In certain cases, it may have happened that in the books of accounts, by mistake, wrong input tax credit has been entered. But can the same number go to the GST portal? No. So there are also reconciliations which are possible on the GST portal in the form of GSTR 2A or GSTR 2B, which is also now available these days. So all of those reconciliations should also be verified by the auditor. Yeah. So these are some of the procedures which the auditor will be required to do and to ensure that his GST audit is completed as per the requirements of the GST laws. Okay. Yeah. All of you clear on this? So with this, we can end our discussion in relation to GST audit, and we can also take a short break of 10 minutes. So after the break, we plan to start another chapter, which is about internal audit, management and operational audit. Okay. Yeah. Let's break now.
Jay? Jen,
Hi, welcome back. So we can now, I think, discuss certain examples before we get on to our new topic. We'll cover some examples around this GST audit first of all.
Achal, audio video on.
So audio video is both on. So all of you, can you hear me? Can you hear me?
Yeah,
So it's on.
but your video is not coming.
Fine now? Is it fine? Jay, please confirm. Is the video audio all fine? Jay? Hi. I'm hoping that audio and video is all good because I understand there was some technical glitch. So we can now again and again continue with our discussion. So we are discussing about GST audit on which we discussed various aspects as to which all things are required to be considered by the GST auditor, and he also has the same provision of putting in the qualifications in his report, similar to what we see in case of statutory audit as well as the tax audit. So now we are going to discuss examples around GST audit, and then we'll move on to our next topic on internal audit or operational or management audit. Okay. Let's say there is a company, say this is PQ Limited, and let's suppose that turnover during the year was rupees 400 crore, and we are looking at the GST audit of financial year 2000 X8 and X9. Yeah, so that is something which you get to see these days, X8, X9. Now in relation to the financial statements, the turnover is rupees 400 crore. So we can say this is as per the financial statements, and the financial statements are audited. These are audited. The other point around GST audit which has been seen is about the annual return. So annual return is currently in the process. So that has been going on in terms of its finalization. So we can say annual return is in process. And that's how the GST audit process goes. So GST audit will also be running parallelly, because auditor will also be required to perform various procedures on this annual return, even though this is in process, or the reconciliations around it, even though that will be in process. So this is in process, and there are certain reconciling items. So let's understand about these reconciling items. Nature means I'm just telling you the nature of some reconciling items. One reconciling item, or means the one difference which exists between the turnover and the annual return in terms of the amount and the corresponding GST liability on the same, is because of some products on which no GST was charged during the year. On which no GST was charged during the year. Okay. And the management is saying that there was a notification from the GST department in relation to this. The management is saying that there was a notification from the GST department basis which no GST was charged. However, the auditor is not able to trace any such notification. It's available with the management. Management has not been able to provide the same to the auditor, but they have been saying that there was a notification basis which they did not charge. They did not charge GST on this. Number one. Number two is about the input credit. ITC. Input tax credit. So auditor found that input tax credit amounting to rupees 65 lakhs on certain items was not availed by the entity. Was not availed means this was not taken as the input tax credit. So entity purchased certain goods, okay, on which rupees 65 lakhs could have been taken as input tax credit, and this input tax credit could have been adjusted with the GST liability. But the entity did not do that. Instead, entity added this 65 lakhs to the cost of those goods. No input taken. Both in books and GST portal. GST portal is the place where all of these filings etc. are done. Okay, yeah. So now these are the two observations of the GST auditor in relation to the audit which has been going on. So audit is not yet completed, audit is all going on. But auditor believes that these two final observations is what with which he will have to conclude his audit procedures and make his conclusion, and then get onto the reporting requirements in GSTR 9C. Yeah, so all of you have understood the facts. You have understood the facts. Now in the given situation, we need to understand what can be the reporting requirements on the part of the auditor, or will there be any reporting requirement on the part of the GST auditor. Okay, clear on this? Will there be any reporting requirement on the part of the GST auditor? So I'll have to just clear this part. Yeah, let me just think about those options. And you will have to just again appreciate the fact that whenever you will be doing GST audit, so similar to tax audit, you will require thorough knowledge of GST. Because if you will not have the knowledge of GST, then again, you will find it very, very difficult to understand the audit procedures or understand the audit requirements. Okay. Yeah. Which is something which you can observe over here. So option number 1. On these products on which GST was not charged or this was not applied due to a notification which is not available with anybody. So actually this notification is not available with anybody, neither with the management nor with the auditor, and this notification does not exist. Why? Because otherwise the management could have shown this to the auditor and the auditor would also have been able to find this. So actually management is just taking the plea of that notification which does not exist. So what has happened? There have been certain sales during the year on which GST has not been charged, but will that discharge the GST liability on the part of the entity? No. So that's why auditor will have to qualify in respect of this GST liability which the management has not considered. So qualify in respect of point number 1. So this is first option, qualify for this matter. Number 2, that also seems to be a very serious matter and seems to be a very, very significant point also. An amount of 65 lakhs has been wasted by the management. They could have easily claimed the credit of 65 lakhs, but they didn't do this. Can you see this? It's a big, big amount. Cash means the bank balance has been used to pay the GST liability, which could have been avoided. So management could have saved an amount of 65 lakhs by taking this input credit, but they didn't do this. So qualify for point number 1 and 2 because both of them are very, very significant points. GST audit. Okay. Yeah. That's the first option available. Option number 2. Qualify in respect of point number 1. Qualify in respect of point number 1. And in respect of this input tax credit, no qualification should be given. Okay. So qualify for 1 only. Number 3. Number 3 is that for the products, if the management is saying there is a notification, there has to be a notification. If the auditor is not able to find it, that's the problem of the auditor. But management is not supposed to show the notification to the auditor and substantiate to the auditor that yes, there is a notification basis which no GST has been applied by them or charged by them. So that's why this cannot be a point which can be considered to be an observation of the auditor, and that's why there's no reporting obligation in respect of this point. And the other point is around the 65 lakhs. This 65 lakhs is a problem for sure because this money could have been saved. So in a way, this is a wastage. So that's why it should be brought to the notice of the GST department, for which auditor needs to give a qualification. Yeah. Option number D. Option number D. Option number D says, so what can be the option number D? Option number D could be in relation to this audit which has been going on. So we can understand that the annual return is in process. So what the auditor can do is, if the management can fix all of these points, or if they don't fix all of these points, if the management can bring out a note along with the annual return to say, if the management note is given along with annual return, because annual return is still in process in relation to these 2 points. We're saying first management will give a note somewhere in the annual return, plus management will give management representation letter. You remember management representation? So the same letter will be given by the management to the auditor in respect of these 2 points. Okay, yeah. So if these 2 things are done, no qualification is required. There will not be any qualification. Yeah. So what do you think will be the right course of action on the part of the auditor in this case? What do you think will be the right course of action on the part of the auditor in this case? A, B, C, or D? Which one will you consider if you become the GST auditor of this company? A, B, C, or D? So let's understand. The first point, it talks about qualification for both the matters. One thing is for sure, that there has been a mistake on the part of the management in respect of point number 1. Why? Because it's only an explanation they have been giving that there is a notification, which is false. In fact, it's kind of fraudulent. Why? Because if they fail to charge GST, they fail to apply GST on certain item, it's okay. But at least no wrong representation should have been given to the auditor. So it's also something which they have been doing intentionally. So that's why qualification on matter number 1 is a must. It's a must. The moment we say qualification on matter number 1 is a must, our option number C goes away, because C does not consider qualification on point number 1. Correct? Yeah. So by default it goes away. And now we need to choose between A and B. Correct? Number 2 is the point around ITC, input tax credit, which should have been availed by the management. Now let's understand the consequence. If the input tax credit would have been availed, so it was a kind of benefit to the management. It was a benefit to them. What was the benefit? Instead of paying the GST liability through the bank balance, means through cash, instead of paying through cash, they could have paid it through the input tax credit. So management could save 65 lakhs, but they didn't save it. But by not saving 65 lakhs, can we say that the management has failed to discharge its GST liability? The answer is no. Can we say that the management has short paid its GST liability? The answer is no. Can we say that the management has reported something wrongly in the annual return? Again, no. Because whatever they have recorded in their books, same thing they have shown in their portal. Though there is no doubt that this was a benefit to the management, which the management should consider. Go forward, management should avoid all of these things because they are losing out money. But as far as GST authority is concerned, as far as GST law is concerned, there is absolutely no problem in case GST input has not been considered. Correct? Yeah. So if we say this, our option number A goes away. And I'm hoping Ambika would have understood as to why this should not be the option. And same is the case of Gigi. Yeah. Now there's no doubt that option number B is correct. Option number B is correct. There's no doubt. But we still have a problem because we need to also understand that is there any way to avoid this qualification? So there's no doubt that the auditor needs to qualify. point number V1. Okay. But is there any way to avoid this qualification? Is there any way? So let's understand through point number D. Point number D says that give a management note for these two matters. So management is not giving a note for this one or this one, but for both. So is the management required to give any note for this one? Not required. It's useless. It's of no consideration to the GST authority. So even if I talk only about this point number 2, on the basis of that, I can say option number D is incorrect. But still, let's deep dive into this. Say even if the management will give a note in the annual return, will the annual return be considered to be correct? Can we say that the GST liability has been discharged fully by the management by doing that? The answer is no, because they are only giving a note. But what about the GST liability which they have not paid, which is required to be paid? That is legal. That is something which is required as per the law. That has not been done. So only this management note and only a representation to the auditor that we are giving all of these things to the department, will that be sufficient? Not at all. In fact, this is completely useless as far as reporting requirement is concerned. So what is going to be the final answer? Qualify for this thing wherein the GST liability has not been discharged by the company. Okay, and they are not ready to discharge it. Clear, all of you? Okay, so let's take one more example now. So let's say we have another company, AMB Limited. AMB Limited, on which GST audit is applicable. GST audit is applicable. Now this company has got multiple GST registrations. So they have got 7 GSTs, multiple GST registrations. Okay, 7, total 7, and for which they are required to give their GST audit reports for each GSTN. Correct? So they are required to give GST audit report for each GSTN. That's how the GST law works. Okay, but the management has not considered this aspect and they have got audited books of accounts on a consolidated basis. Means for all of these GSTN taken together, they have got audited books of accounts, audited financial statements. And the management also has the information available for all of these GSTNs on the GST portal. We can say GSTN wise, or for each GSTN, information is available on the GST portal. Correct? Yeah, that's how the information is available on the GST portal. Now the auditor is looking at audit of each GSTN, wherein he is asking for GSTN wise books of accounts. So he's asking the management books of accounts of each GSTN or the information of each GSTN separately. Management is saying they don't have any such record. Every information is available in this audited books of accounts. They have provided the access to the auditor to this consolidated books of accounts, and they've asked the auditor that if you want to prepare something out of this, you prepare it on your own. We have given you complete access to the books of accounts. So management is not restricting the auditor to access anything in the books of accounts. Full access is given. Everything is given. But they are saying, don't ask us anything beyond this. If you are looking at anything on the basis of GSTN, management has also given the access to GST portal. So the login ID, all of these things have been given to the auditor. Now the auditor is stuck. Why? Because he needs to perform his procedures which require auditor to do reconciliation. Remember reconciliation? So let's suppose there's GSTN 1. For GSTN 1, auditor will require reconciliation of books of GSTN 1 versus annual return of GSTN 1. That is required to be done, and that is also required to be filled in the utility. But this information is not available. Now, who will provide this information? Management is saying auditor has complete access, so they can get into the details, and whatever they want, they can access and put that down in the form. But auditor is finding it to be difficult. Now, in this case, let's understand what are the options available to the auditor. What are the ways through which auditor can work on this? Yeah. So the first way, which is considered to be very, very simple. Take the information from GST portal and consider the same information consider the same information for books of accounts. Means auditor will pull out the details from the portal of GSTN 1 and will consider that the same number is appearing in the books of accounts. So that's the first option. With this, he will be able to resolve this problem and do his reporting. It's an easy way, correct? Number two, we can see that the financial statements are audited, books of accounts are audited, already audited by a statutory auditor, on the basis of which auditor can place reliance on the books of accounts. That means books of accounts are clean because it contained a clean report. I'm just adding to the facts that the report of the statutory auditor is clean. So it's a clean report given. So auditor can say that yes, books of accounts are fine. So there's no material misstatement in the books of accounts. On the basis of which he now only needs to check about the total details which would be flowing in the GST portal. So what he can do is he can look at the consolidated detail of GSTNs as per the GST portal, match them with consolidated books. If that is fine, it's not a problem and he can just close his GST audit. So console numbers are compared and if there are no differences, then no reporting then no observation or then no reporting implication will rise. Option number B. Okay. Then I think we can look at option number C and D also. Option number C. Option number C is very simple. Very, very simple. Management is not providing the required information. Management is not providing the required information. What auditor is looking at? Even though management is giving full access to the books, even though management is giving full access to the portal, but the way auditor requires is not available, which doesn't seem to be logical, but still the management should understand the way he requires, it should be provided the same way. Even if it isn't provided in a different way, it doesn't matter. Yeah. So if the auditor is saying, no, I want this way, then it has to come this way only. And if it's not coming this way, the way auditor requires, then what's the way out? Qualify. Yeah, what's the way out? Qualify. Okay. Or another way out is possible, that auditor knows books of accounts are audited. Auditor knows that the information is available on the portal. The only thing which is missing is to prepare the information of the books of accounts GSTN wise. That can be done by the auditor also. If the management is not doing that, auditor can do and close the chapter. So what's the point of getting into a dispute or disagreement or to get into a qualification? So auditor will prepare the workings, audit them, and in case there are no differences, then issue a clean report. Give a clean report. Okay, then he will give a clean report. I think in the meantime I've received a couple of points from Supriya and Gigi. Oh, so they are talking about the previous one, previous query, that previous example that we discussed. Good. Okay, so now on this one, what do you think will be the right course of action? A, B, C, or D? What do you think will be the right option out of these? A, B, C, or D? All of them, in fact, if you ask me, seem to be logical, because any of them can be chosen practically, isn't it? Yeah. So let's look at option number 1 now. Option number 1 says, take the information from the portal and consider as if books have got the same information. So this will never lead to a reconciliation difference. But will that be a right thing to do? Then what will be the use of preparation of books of accounts? Management simply can do all the recording of all of these items in the GST portal. Then effectively we are saying that the books of accounts are not required to be prepared as far as GST audit is concerned. So will that be the right approach? The answer is no. It cannot be the right approach. That's why this option is not acceptable. Number 2 option requires comparison of only the console numbers. Means company as a whole picture is considered. Even if there are differences, let's suppose in GST1, GSTN1, GSTN2, GSTN3, at the company level they are reconciled and we are looking at the liability of the company. But can this approach be accepted by the auditor? No. Why? Because department is looking at information GSTN wise. So auditor will be required to issue 7 audit reports. So can the auditor say, or can the management say that because it's one company, so that's why you need to look at the overall picture even if the picture which is GSTN wise is incorrect? Not acceptable. This is again not acceptable. So I think Gigi is going with option number D. And same is the case of Shubham. Great. Option number D. So let's pick up the option because you are liking this option. So let's understand this option. Option number D says that whatever information management should have prepared and provided to the auditor. Whatever information management should have prepared and provided to the auditor. If by chance that information is not provided by the management and they are not ready to provide, then the auditor should provide that to himself. How? So auditor will prepare the workings. So is that the right thing to do? No. Preparation of all of these workings is the responsibility of whom? Management. So if the management will not prepare this, auditor should not prepare this. It's the responsibility of the management. So auditor cannot get into the management's shoes. That will be incorrect. That is not acceptable. So the moment we say that auditor will prepare the workings which are required to be prepared by the management, this option will automatically become incorrect. Yeah. Ambika is saying, sir, option number C, because as per the GST, separate books need to be maintained at for each GSTN. Let's understand whether C is also correct or C is also not an option. C says qualify. Why qualify? Because the information is not available GSTN wise. That's the only problem. Now let's try to understand the requirement. See, the auditor here is not auditing the company as a whole. Auditor is auditing 7 GSTN. Each of them are audited separately. And for each of them, separate audit report will be issued. So if the separate audit report will be issued, so can the auditor say that he can accept this total position or the console position? No. So till the time he will not receive the information, forget about his audit. How will he put down all of that information? You remember the utility. All the information in that utility, how will that be put down in that utility? Who will put that down in? Who will put that information in the utility? No one. So what is the option available to the auditor? No option is available to the auditor but to qualify. So what will be the right course of action in this case? Qualify the audit report. Okay. Clear on this? We can take one very small example now and then we'll start in the chapter. So small example quickly and then we move on to the next chapter. So we're looking at a company, say GG Limited, and this company has got huge expenditure of freight. As per the GST laws on freight, on this expenditure related to freight, GST is required to be charged under reverse charge mechanism. So there is a reverse charge mechanism. Wherein the management will pay the GST liability on the freight and will also take the input credit for this. Okay, yeah, that's the requirement. Now what this company has done, they did not know this concept of reverse charge mechanism by chance. By chance, the knowledge of this concept was missing. And it's the first year of audit or maybe the first year of the team which is getting this audit done. But they didn't have the knowledge of any such concept. So that's why during the year, all the transactions which they had were not considered in respect of this mechanism. And all of these transactions went without applying this. on those transactions. And the amount is huge. Okay, this freight is huge. All right. So now in this case, let's see what can the auditor do. So now GST audit is going on, wherein auditor found this. So management is accepting this point. It's not that management is not accepting. They are saying we didn't know about this. And now the auditor has come. Now the auditor has told them that this is something which they should have done. So management is saying, okay, fine. From next year onwards, we'll start following this. Because in the current year, we can't do anything because it's gone. And it's long time since the this entire input, etc., they could have availed. So they have neither paid the liability nor taken the input credit. So both things are missing in this case. Okay. So let's understand the first option. So this is something which is not done intentionally by the management. It's unintentional. Secondly, management is also agreeing to correct this from next year onwards. Okay, will be corrected next year onwards. So that's why auditor should just leave this. Auditor should just leave this. So no reporting implication. Next option. Even though this is unintentional and even though management is accepting this to be considered from the next year, still liability has not been discharged. So liability stands unpaid. That cannot be ignored by the auditor, and that's why auditor needs to qualify if this is not rectified. Option number C. Management has a point. So of course they didn't have the knowledge, but they have a very, very logical observation. Management is saying at one point we were required to pay the liability and same amount was required to be taken as input credit by us. Correct? So effectively there is no impact on the GST liability. Effectively there is no impact on the GST liability because net it is zero. On a net basis it's zero. That's the assessment of the management, and that's why auditor should accept this, and auditor is also accepting this. On the basis of this logic, no reporting obligation. We are saying there is no reporting implication, but now the reasoning is different. Because of this reason, there is no reporting implication. Option number D. Option number D says that for GST, what is required? Books of account should reconcile with GST portal. Now in this case, books are absolutely matching with GST portal. Management is saying, forget this mechanism. We don't understand this mechanism and we don't want to understand this mechanism. For us, one thing is very simple, that books should reconcile with GST portal. There is absolutely no difference between these two. So if there is no difference between these two, there is no reconciling item which exists, then of course it has to be a clean report. And the same consideration is given by the auditor, basis which no reporting implication will arise. Correct? Yeah. So now let's try to understand what will be the right course of action. Shubham I think Shubham has some point on this. I'll discuss that with you slightly later as to what's the point of Shubham. So let's go with the option number 1. To say a mistake was done unintentionally and to say mistake will be rectified in the future years cannot be the plea on the basis of which reporting implication will not arise. Yeah, mistake is a mistake. So if we say it's a mistake, then the reporting implication will arise. To say it's unintentional and that's why the reporting implication will not arise is not acceptable. Correct? So I'll discuss all the scenarios wherein there is no reporting implication first of all. Number 2, it says on a net basis the impact is 0, but is the impact really net? The answer may be no. Why? Because some of the input credit may not be available to the management at all, but as far as GST liability is concerned, that will still stand undischarged, on which not only the liability will be required to be paid, but the interest will also be required to be paid, and there can also be the penalty implications. So that's why again this reasoning is not as per the GST law. This is also not acceptable. Number D is a fair point. So to certain extent I'll agree with this, and before that I'll quickly read out the points of Shubham. He's saying, sir, it is compulsory to pay RCM in cash through e-cash ledger and take the input tax credit. That's the fair point, and the same thing was considered in option number C, because of which netting was done, but that's not acceptable. Huh? Gigi, I think, has given the response, and Ambika has also got the response. Ambika is saying option number B, and Gigi is also saying option number B because lack of knowledge of law is not valid, so need to be qualified. So Ambika, I think you are not considering option number C and D because of the reason you have mentioned. Case I is saying B, as per the GST, we cannot claim the expenses if the RCM is not collected. All right. So let's go to option number D because this seems to be a fair point. And I think somewhere the GST requirement has also been fulfilled. So the management is saying books are tallying with the portal. So whatever goes to the portal is there in the books. There is no difference at all. There is no reconciling item. And auditor is only required to look at this reconciliation, which has been done by us. So even if we put down this input credit in the books, what will happen? We will have to put down that in the portal also. There will again be a sort of a similar situation, which is net no impact. Yeah. In this case, we were computing it on the basis of GST liability, but in this case, we're just trying to compare the books and the portal amounts. On a net basis, herein again, management is saying the reconciliation part is done and all of these things happen to be similar, and that's why no reporting implication will arise. Now in this case, let's go back to the understanding that we had about the requirements of the GST audit, that in case the management misses out reporting any liability, and even though there is no reconciliation, but the management misses out, still auditor will have to consider that. Auditor will have to report that and put that down in his recommendation and put that down in his GSTR 9C, on the basis of which this option will become invalid. Correct? You remember we discussed about that point? Now what is the residual option? Option number B. But let's also try to analyze this. Is this really the correct option? Now when we say qualify, we are looking at one requirement of the law which says that the GST liability is still not paid. And if the management is saying they will correct it in the future years but not in the current year, so can the auditor say that the particulars which are given in the return or the GST liability which was required to be paid has been fully paid, discharged? The answer is no. And this amount is also huge. Even if the amount was not huge, it doesn't matter to us because every amount of GST is required to be paid. So what should be the right option in this case? To qualify. Simple. to qualify this report GSTR 9C. Okay, yeah, all of you clear on this? Then I think Shubham is saying they will have to pay GST with interest at the rate 18%. Supriya has also given a response. Supriya is saying option number B is what Supriya mentioned. She said because auditor need to do audit according to the law, not as per his will to ignore the aspects on just logical basis. That's correct. That's correct. Okay, so now we can start with the next chapter, that is about internal audit. Chapter number 15. So let's understand about the internal audit first of all. And this is something which is very, very common. All of you must be knowing about internal audit. So in simple terms, if we have to understand about internal audit, what does it mean? Internal audit means a process of an organization. So we are not calling this to be an external audit. What was an external audit? Statutory audit was an external audit. Means it was an audit which was done by a third party, and that party was independent of the management. But unlike that third party, internal audit can be done by a department of the organization. So there can be some internal auditors who may be the employees of the company and who will be carrying out the internal audit. But even in that case, independence is required to be maintained. So we'll go to that aspect also. But in terms of the aspects which are required to be considered in respect of internal audit, that happens to be around the control systems of the organization, various policies and procedures of the organization. The internal auditor will have the responsibility to ensure whether the systems and procedures of the organization are operating in the manner the way they are required to be done, and which again is not required to be checked on a 100% basis. There are again ways to check it, but this assurance should come to the management that all of these aspects have been taken care of to achieve the objectives of the management in relation to all of these systems and procedures. Okay, so let's understand the meaning of internal auditor. Internal audit means an independent management function. So forget this term independent for the time being. We'll come to this later on. So it's a management function, means a function of the management, which involves a continuous and critical appraisal of the functioning of an entity with a view to suggest improvements. So it's a kind of audit. So when we say continuous and critical appraisal, we are looking at the processes, systems, procedures. Why? So that the improvements can be brought in and add value to and strengthen the overall governance mechanism, including the entity's strategic risk management and internal control system. Yeah. Now let's understand the applicability of internal audit. So let's see to whom this internal audit will apply. Following classes of companies shall be required to appoint an internal audit. So that means it is something which will be discussed only in the context of a company. We are not looking at non-corporates to which this will be mandatory. Voluntarily, it can be done by anybody, but we are now talking about mandatory requirement which comes from the Companies Act. every listed company, irrespective of its size, every unlisted public company having paid up share capital. So first criteria is paid up share capital, which is 50 crore or more on the basis of last year's numbers. Now we are again back to the term financial year. So we are now not using the term previous year or the assessment year. Okay, back to the normal terms in the accounting language. Or turnover of 200 crore rupees or more. So if you look at that criteria from turnover, so it's 200 crore or more. Outstanding loans or borrowings from banks or public financial institutions exceeding 100 crore or more. 100 crore or more. At any point of time during the preceding financial year. Now, this is very, very important point, that when you look at the paid up share capital or turnover, then you are looking at the total number of the last year. But when you look at this outstanding loan or borrowing, you are looking at any point of time during the preceding financial year, or outstanding deposits 25 crore or more at any point of time. This is again at any point of time, means in the last year, if at any point of time this number touched 100 crore or 25 crore, as the case may be, then the internal audit will become applicable, even though at the year end these numbers were below the threshold which have been specified. Still, internal audit will be applicable. Next, applicability is to the private companies on the basis of turnover. So that means this paid up share capital criteria goes away. So the turnover remains and the amount of turnover criteria is same. So we can say it is same. Next, outstanding deposits go away. Outstanding loans or borrowings from banks, financial institutions exceeding 100 crore or more remains. So this remains for a private company. Means the coverage of private company is not so much as compared to public company, which is unlisted. And for a listed company, it's all covered. Now the other point about the internal audit, unlike in case of statutory audit, is that it can be an individual, it can be a partnership firm, and it can be a body corporate also. It can be a body corporate also. So what do you mean by body corporate? Means a company, a private limited company can become internal auditor of another company. So we do not have only a CA firm or a chartered accountant in practice for internal audit. No. That was the requirement in case of statutory audit. Now, even if we don't have this practicing chartered accountant, still internal audit can be conducted. Okay. So internal auditor can be a chartered accountant, cost accountant, or such other professional as may be decided by the board to conduct internal audit functions. Okay. The internal auditor may or may not be an employee of the company. Now let's understand this point. Internal auditor may or may not be an employee. So what does it mean? See, in case of an internal auditor, there are two options which are available to a company. Say this is a company. This company can either engage, say, a firm of chartered accountants, say RR and company. It's external to the company. So we are saying its company is SV Limited. Let's suppose this is SV Limited. So SV Limited can either engage RR and company for its internal audit, or another option available to SV Limited is that they can set up a department, or they can have a internal team. Internal team means a team within their organization who will carry out internal audit of the company. Who will carry out internal audit of the company. So what would it mean? That the personnel who will be working on this internal audit in this department or this team will be employees of the company. So they will be the employees of the company. Yeah, they will be the employees of the company. Now both the options are available to the company. So there is no specification in this case that internal auditor can only be a third party or it has to be in-house only. There is no such rule. There is no such criteria anywhere. This type of arrangement will be called as external internal auditor. Means internal auditor is a third party. That's why we are using this term external. It's a third party. This type of arrangement will be called as in-house internal auditor. Something which is in-house. So they are not engaging a third party. In this case, there are employees of the company who are working on this function. Now, if you look at the requirements of the internal audit, the definition of the internal audit, there was a term which was called as independent. Correct? Independence. So what do we mean by this term independence? The role of the internal auditor is to review the functions of the organization, review the policies of the organization, review the control systems of the organization. And that is only possible when this internal auditor will be free from any bias. He will be independent. Yeah, you understand the meaning of independence? It's same which we discussed in the context of any other audit. So this independence is mandatory on the part of internal auditor. Otherwise, he will not be able to carry out his activities the way those are required to be done. That's why it's a mandate. Now this independence, you may say, sir, is easy to be maintained in case it's a third party or an external party. But in case the personnel involved are employees of the company, how can they be free from the bias? Or how can they just stay independent? Because it may happen that these employees are reporting to the CEO of the company. These employees are also reporting to the CFO of the company. And some of the functions which the CFO is required to handle, which CEO are required to handle, those will also be handled by these internal auditors. So what will happen? Will they be able to carry out their work independently? The answer will be no. So that's why in that case, it's very, very important to fix the responsibility of these personnel in a way that they stay independent. Their reporting requirement should be such that the independence is maintained. That will be the responsibility of those charged with governance, because they will be the one who will have this responsibility to set up this department or to bring in this third team or this team of external internal auditors. All right, clear on this part around the internal auditor or the independence which they are required to maintain. Okay, yeah. So let's move further. Let's quickly look at the main responsibilities of the internal auditor. He is required to maintain adequate system of internal control. He is required to operate independently and in no way divest himself of any of the responsibilities that are placed upon him. He should not involve himself in the performance of executive functions because that's not required on him. And in case he gets involved in those functions, then effectively what will happen? He will end up at the end auditing his work, which will again not be considered to be independence. He must be involved in terms of to observe facts and situations, bring them to notice of authorities who would otherwise never know them. They critically appraise various policies of the management and draw its attention to the deficiencies wherever those are required to be corrected. To associate closely with the management, and his knowledge must be kept up to date by his being kept informed about all important occurrences and events affecting the business, as well as changes that are made in the business policies. And again, it's about the independence that is required to maintain. In addition, the audit committee of the company or the board, who are they? Those charged with governance, shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity, and methodology. So this overall responsibility, if you'll see that we have read so far, they are all about internal control systems. They are all about risk management system. They are all about policies and procedures of the organization. So who will have the overall responsibility in terms of operating effectiveness of all of these systems? Whether these systems exist or not, or whether these systems are operating or not, and if they are operating, those are operating effectively or not. It's the responsibility of those charged with governance. So that's why those charged with governance will involve internal auditors, who are again in a way supporting them in discharging their responsibilities. So that's why it's required to be a joint effort wherein internal auditor will be working closely with those charged with governance. And the scoping and the assessment as to which all areas required to be covered, the periodicity means what should be the period over which a particular area or a particular function or a particular process is required to be reviewed. That will be in discussions with both the parties. Okay, yeah. So we are still left with some more parts around the internal audit, which we plan to cover when we meet next, because I'm sure many of the parts related to internal audit will not be able to capture today. And I would not really like to stretch this session, considering that we have this back-to-back sessions also now. Yeah. So we'll meet next in the next, and we'll continue on internal audit. Yeah. Thanks to all of you now from our side. Thanks all of you once again for your wonderful participation.